going, folks? Let's get into a midweek update for the 14th of December. Now, we do have, shocker, it's a Fed day. Take responsibility for what we talk about today, guys, because there's going to be a lot of opinion in here, and there's going to be a lot of different types of styles of traders. So, just take responsibility for the outcome. Now, what I found was super interesting. Now, folks, I did the Monday roundup, and I said I don't see the market selling off at all. In fact, I don't know how they would digest bad news, but I know that if the Fed got out of its own way, I think these markets would take off, and boy, they sure did. Now, what I did not expect was it to come all the way back down. That was perplexing. That just kind of reiterates and reinforces the outlook that Mavericks got over the last couple of weeks of sideways. I saw that number come in, and I'm like, whoa, that CPI is super low. That's going to be a great sign. I saw the futures just skyrocket. And throughout the rest of the day, sell all the way off. In fact, the Dow at one point was negative. It was only at that last little bit where it actually closed up about 103 points, or about 0.3% for the session. So now I'm stuck back to where I've just thrown up my hands, and I realize I don't know. I don't know what's going on. I don't care. I just want to get to 2023. Because if you're trying to second guess things or anticipate, you're just going to get wiped out. But what has held true is sideways. What has held true is whenever they extend themselves to the upside, they come right back down. Or if things break down, buying comes back in. So the sentiment is still absolutely neutral. The CPI was lower. We have the FOMC today. And I know, obviously, that is going to create its own head waves. So past that, that's it. If you take a look at what we talked about, or where we were last week during this class versus where we are today, it's slightly higher, but we're still within that range. I'll get to the chart here in just a second. Now, our trade ideas haven't changed much. I've pushed a bunch of the bull stuff down to neutral. And I think a lot of that had to do with just the shaky grounds that we saw when I saw that buying was met with selling. I did not anticipate that. Like I say once again, now it's really interesting, folks, that we've talked about, hey, there's no real reason to sell here. Tax implications, you might as well wait till the next year. But it does show you that there is a line of sellers at some of those higher levels, because it wasn't just a little bit of selling, folks. It sold off all day long. I'll show you the candlestick. It's called Dark Cloud Cover. And spoiler alert, I'm going to actually teach that class in the next 2 weeks. Not this week, but next. So, which is a capitulation move to the upside. It's a blow off top, also known as. So I had no idea there were that many sellers ready to go, even before year's end. So let's take a look at some of the trades that we have in front of us. This is Raytheon Technologies. It's a pretty decent trade. I like it. It could be, I should say. It's holding in there. It's in the right sector. It's defensive. Aerospace and technology. Let's go ahead and find my shift button. There we go. Okay, so I do like this ascending triangle breakout above this area. You could still make the argument for range bound. This is what I'm going to kind of hammer for today, or beat on, I should say, for today, because we're going into a Fed meeting, and once again, once this class is over, the Fed meeting, it's a coin flip. But that is a lot of volume. That is a substantial amount of volume that gapped up and immediately sold off. But this didn't fall completely apart. This is hanging in there above a pretty good respective range of 98 up to 102. So sideways, sure, I'm comfortable there. Or even up. Or even up if these markets decide to see what the Fed says, digest it, and realize, you know what, it's dovish enough to where I'm cool going into the beginning of next year. Let's go ahead and buy. And that's referred to as a Santa Claus rally. So I'm still thinking there could be a Santa Claus rally. I really, truly believe it has to do with what the Fed does, and more importantly, what the Fed is going to project moving forward. And then we could get, but I would like to see, I'd like to see a slow churn higher versus just a massive surge to the upside, because, boy, I saw what happened to the last massive surge, and it got sold into pretty aggressively. It's kind of tough to get confident in anything going to sustain itself up or down. Down for sure, but up, man, I was surprised. This is STNG. This has been on our watch list for a while. In fact, I went back a couple of weeks here. Let me see if I've got the list for it. This is on the, oh wow, this is way back. But it's been holding true. Beginning of November, by the way. This has been popping up on our bull watch list, right? Check us out. Do we know what we're doing or what, right? So it is looking really good. I do like the ascending pattern that's been going on. It's been sticking pretty close to its 20-day moving average since November. Today's candlestick is a little bit reluctant. Doesn't mean you have to go ahead and hit the buy button, but sideways to up, fine. It's great. It's once again energy. Now energy once is for the second week in a row the weakest sector, but when I show you the chart, it's not really weak. It's just not as strong as the others. And it is also a defensive sector. So keep that in mind as you're making your decision. So let's move on to our sideways stuff. I had a bunch. Once again, I'll tell you, I moved some bulls to the sideways just for precautionary reasons. I'm seeing a lot of traders throwing some diagonal spreads and some targeted butterflies, and they're just not quite getting there. Corey made a really good comment on the end of day post yesterday that it's timing is tough. Knowing that it's eventually going to happen is, he said, was easy. I don't think it is. He's a better trader than I am. However, the timing is difficult, and I will agree with that. So when it comes to something like this, it was on the bull side, and it still has the potential to be bullish if it can stay above 45 and then float higher. If we get a good positive Fed stance and a positive follow through, then sure, this could bleed higher, and it's really good for a diagonal spread. But if you don't believe in that, well, then you've got a pretty good range here at 45. If you want to err a little higher, about 46, 40, well, 47 and a half, down to 40, then we could play something kind of chomping around there. Now, healthcare was the strongest sector last week on this class, replaced by technology, but I think technology just kind of had an oversold bounce or some bottom fishing going on as we are getting closer to the end of the year with that CPI number. So we'll see if that happens again based on the Fed. Starbucks, love this one on the bull side. It's on my bull watch. It had good numbers. It beat numbers. It is a safety stock. What do I call it a safety stock? It's coffee, folks. We need our coffee. If we're going to hit a recession, we still need our coffee. All right, that's my opinion. It's a joke. But I do like how it's sustained itself above this $100 level after its announcement, and it just took off. So it's looking really, really good. It's above its moving averages. It looks like there's a consolidation point just above 100. I would err a little bit lower if you want to play this sideways. Sure, the resistance hit at 105 off of that interesting CPI number. It gapped up and came down just like the rest of the world. Check this out. Not a lot of participation, though, on that day. The ones that you want to pay attention to are the ones that had high volume after the CPI announcement and that came back down. That's got to make you scratch your head. This one, yeah, sure, it experienced some selling, but there was not a lot of people that ran to the exit in Starbucks, which is why I think it has a pretty good chance to continue to outperform. Another one, you can't have coffee without a cigarette. Okay, geez, that's a joke. What am I saying? I've seen a lot of market corrections and recessions and things that don't give up much. Cosmetics, tobacco, alcohol, creature comforts, movies, stuff like that. So I would expect this maybe to hang in. Now, that being said, let's just chart it. I like this support level here at 102. It did kind of blip its head up there a little bit towards the end of June. Now remember, this came off of a pretty good high. You can't see because I zoomed in a little bit much, but it's starting to respect this range of 104, 102. Now it's early yet, but this is something that makes me believe that it's a little bit recession-proof. Once again, this volume was a little higher than expected, but nothing like it was on that last surge to the upside with worries. Remember? Fear. So, can this handle recession? Sure. Can it handle a little bit of volatility? Of course it can. Still a sideways play, isn't it? All right, in the defensive sector. It's kind of cool. I'm starting to see things make sense as they go from defensive sector. It's a little bit more reserved. They have some good patterns behind them, things of that nature. So check out the rest of those sideways trades, but they're pretty cool. So let's move over to the bear side. This one you would think would be a little bit more defensive because it's basic materials and agricultural, but Mosaic has been struggling for quite a bit, and it's been on our bear watch here and there. It's been on a little consolidation sideways stuff. We did have this ascending triangle pattern back here in the day. Let me make this a little bit more ugly for you there. Little symmetrical triangle, but it was after a peak and some decent lows. So this had been a little deeper than what we'd expect. Well, no, that's not true. That's not true. Look at this, folks. That was a true symmetrical. So it could have flipped either way, and it flipped to the downside. Broke some support levels. Let me draw those. Some pretty good support levels here at 48. Now we're approaching another one here at 46. I don't know if it falls apart, falls out of bed. If it's something to be super, super bearish on, I'm not very aggressive in direction. You guys know that. But sideways to down, I could get behind it. If it's for you bears out there, or for you bulls that need a little bit of a bear, this might be one. CRWD, CrowdStrike Holdings, been on our bear watch on and off for a long time, and it looks like it's setting up again. We watched it here, we watched it here, we watched it here, and here we are again in this little bit of a range. So I don't think it's going to fall out of bed, but I mean, that's a pretty good move from 110 to 120. It could do this again. Now, what's tough about this, and for some of you guys that, well, I'll pull up what Corey talked about yesterday, that are having problems with timing, this one is going to be difficult to time. This could hit it in a few days. This could hit this 110 in one day. It might not even get there. It might just consolidate sideways. So you got to give it a wide range. If you're going to do something short term, you still have to go super wide. I've got a lot of traders, and I've seen this mistake multiple times recently, that will see a range of 120 to 110. That's a $10 range, and place something $2 apart, here to here, or here to here, or here to here. I mean, you guys get the idea. And what's difficult about that is you're throwing a dart at a board that only has the bullseye. You're not giving it the area to hit, you know, your triples and your double score, or even the outside. At least hit the cork. But if you zero in your bullseye too small, within a day you could be at max gain, and the next day you're at max loss. The next day you're at max gain, next day you're at max loss, and that could create a lot of impulsive moves and a lot of worry, a lot of fear. So respect the volatility of the stock you're trading and compensate for it. Okay, let's go to coin. This is one that's been on our bear watch for a while. A lot of consolidation. Boy, I believe that we were talking about, hey, this thing might stay up in this area between the 60-80. I know I talked about this. And then it finally broke down. It looks like it was going to try to establish a range, but this is almost, since it broke that 60 mark, almost has a little bit more of a pessimistic pattern to it. And I'm going to put a lot on the current situation with FTX and with what's going on and some of that. I'm hoping this isn't going to be the beginning of an onion, because if it is, it's going to really sour the taste of traders that jumped into Coinbase to make some crypto trades. This could just kind of fizzle itself out. That's why it's on the bear watch. The volume not so big on the day to the downside, but the candlestick was still directional, a little bit weak. Let's see if it can continue or show some confirmation below that $40, and it could be a nice little bear. All right. That's what we've got so far. I mean, pretty cool trades, folks. Great job. Keep it up. Let's get into the market analysis. And you're going to see that so far that we're up. And this is from Monday to today. And the big part of it was we did gap up quite a bit yesterday, but we did close higher, slightly higher. So we had a pretty good move Monday, a massive gap up. Boy, we were up 3% for the day, almost 3%. Came back down and closed up just about 0.3%. But overall, we're still higher. Dow, the SPY, and the Qs are sitting on some pretty good gains for the week. But we're in that neutral area once we get to the chart here. Russell's neutral also. Oil, 7%, still coming off of a pretty good sell-off last week. And then gold, flat, still kind of parked, kind of wondering where to go next. So let's take a look at the charts. These are the things. I'm going to change my pin color, folks. Let's go red. Let's make it a little bit more authoritative. I don't want to spook anybody, but these are some of the things that raised an eyebrow. The first one was this resistance point that it hit at 410. Now, I can zoom back out and give you that beautiful trend. Corey did a great job of that yesterday, so if you guys want to watch the end of the day post to get that, go for it, because this gap up came right back down to that bear rally resistance point that we're sitting on a weekly chart. Now, today, a little bit of an inside day to be expected, especially after this volume. This volume still makes me scratch my head. That is a ton of selling. It just came in like gangbusters. It's like it triggered a bunch of just sell orders. So we're still within a range. Now, here's the idea. Here's the next hurdle. Is our range now moved up between 410 and 400? And if that's true, guys, that's just too tight. That's just too darn tight for me to make any sort of trade in the next couple of weeks. Now, I can go down and still respect what we've talked about even last week, 390, 410 to 390. That's a safer bet. First thing I think about is, hey, how about a butterfly? 410, 400, 390 over the next week and a half. Great. Knock yourself out. I'd do that if it wasn't for the fact that Powell's going to come out and make an announcement here in the next hour or so. But it is setting up pretty good channel and a pretty good argument for sideways. It is above its 20-day moving average for you guys that want to score it as well. I did. I scored it a little higher than I wanted to because it is above there. And the day's not over yet. These are tough days. Here's the diamonds. Now the diamonds is this outperforming chart that we've been talking about for a while, and the volume didn't participate as much. So the general sell-off in the markets was still gauged to inflationary stocks, the SPY, and the Qs, the speculative stock. You'll see here in a second. It's just funny because it seems like there's such a deep line of traders that are wanting to sell, but they're just waiting for their set to come in. They're just waiting for the level to hit so they can get out. This one wasn't much of one because it gapped up. Sure, it came back down. That's a Marabozu on open, right? So that thing immediately started to sell off once it hit this level of above resistance. But the volume, it's one of the higher, but it's not super impressive. It's not scaring me away, and it does look considerably better than the other markets. All right, enough of that one. Let's get to the Qs. So here, substantially, well, I guess now I look at it, it's been closing, but it was a little bit of a blip up. It's higher. It's still looking pretty. It actually looks more like the SPY. So here we are. Back down, poked its head above resistance, back down within that range that we've been talking about. If you want to open it up a little wider, I'm fine with that down to 270, but this 50-day moving average should be respected. It might be. I mean, it should be. So now we've got a tighter range in this between 280 and 290. We'll see if it stays there past today. Right? We still have a pretty big announcement. Speaking of which, let's take a look at some of these announcements. So on the economic reports, not much going on until we get to the CPI. That's a pretty good drop. Already expected to drop, and it did drop. Now, one thing I will make mention of, and this is why I could kind of justify the reason why we sold off, is because inflation is at a rate of, well, here it is right there, 7.3, and it went to 7.1. That's still super high. It's showing that it's slowing down, but it's still increasing by 7.1% year over year. It's still high. I've had many conversations with you folks, and it's funny because, yeah, at least the inflation is starting to come down, but you know what's not going to come down anytime soon? The price of stuff. It still has to peak. It's showing a sign that it might be slowing. But 7.1% is less than 7.3%, but our target is somewhere in the fives. We need to see that get closer. 7, 6, 5 would be, once you see it go from 7 to 6 and from 6 to 5, then you're going to see, hey, I'm not paying too much for groceries. I'm not paying too much for my bills. That's when we're going to see it. Right now, it's just teetering. So it's a little bit, it's slower to move than people think. Now, does that hurt the consumer in the first half of 2023? You guys have read headlines. It's completely going to. It's expected to. How does that shake out when it comes to buying stocks? There you go. So there's the question we have to ask ourselves. Moving on to the, oh, by the way, folks, let me go back one because here it is. This is what we're looking for, is going to be our federal funds announcement. Somewhere between 3.75 to 4 0% target. Is he going to do 75 basis points or lighten up and do half? It's going to be interesting to see. And I know it's down at the bottom here, but it's going to be the press conference. I really think the talk is going to carry more weight than the action, unless that action is less than the target that he's going to cut by. So if he cuts less, I think we get another surge. It's going to be interesting to see what happens afterwards. Now, this is where a little bit of the mix-up happens, and it could be just because things are caught in transition. The initial jobless claims, I just want to see it drop. They're looking for a slight uptick, right? Which we want to see. We want to see this increase. So that's people losing jobs, but it's actually a good thing. This is going to be an interesting one, expecting a pretty good drop in retail sales. Understand, retail sales, consumer is not slowing. So this number could be a spoiler. If it's not negative or at least close to that, that could be a little bit of a spoiler. Manufacturing, Philly and Empire State, that's fine. Down here, the services PMI. Now, this is the S&P U.S. Services PMI. Understand that the ISM services was higher. And I think that really spooked the markets because the services sector was increasing, meaning the demand for goods and services going out to eat, traveling, hotels, stuff like that is higher. So let's see if this number comes in line. If they are already conceding a little bit of an uptick. So those are some weird numbers that might shake things up going into Thursday and Friday after today's Fed meeting. All right, doesn't mean it will. Okay, but keep an eye on it. Let me get the poll here, if I can find it. Sorry, folks. There it is. And let's pull the class and see what you guys are thinking. There's our poll. Got it distributed. And we're off to the races. These can be difficult months, and based on what these markets have done over the last quarter, very tumultuous, very volatile, very corrective. They'll move higher and they'll fall apart, and then just when you think they're going to be bearish, they come flying back up. But some of the sectors have been a little bit consistent, and it's been difficult if your timing is off. We talked about, hey, looking for 2 months out, and then we go on a 1 month out, and then 2 weeks out. And maybe contracting isn't the best way to do things. It is if you're going to be specifically targeted. If you're shorter term, just have something that's scalpable. It's calls and puts. However, I do want to really echo what Corey said. It was a good point. If you're going to go an area, I think it's going to be up in this area or down in this area. You kind of just want to give it a big berth, 2 months, 3 months out, which he does. Well, for me, that's hard for me to say. But what he's looking for is something that, okay, in the next few months, we should be somewhere around this area. That trade's a little easier if your outlook is correct than it is saying, okay, in the next 6 days, I want this to go down $8. That's a difficult way to trade, especially in these markets. All right. 100% vote. Wow, check that out. Awesome. Okay, here's the poll. Let's share it. And as you guys can see, 69% flat, 38% up, 31% down. That is an absolute zero. Thanks, guys. Makes total sense. And lo and behold, I got to make sure that I end the poll here. Hide it. There we go. And I agree. I'm with you. It did go above the 20-day moving average. The slope is higher. I could say short term that I would be to the upside, but just seeing how much selling came into these markets yesterday, and it could just be a one-time thing. It could be a freakish thing that it flushed out a bunch of sellers, and then now that the Fed comes out and says something bullish, we just rally through the rest of the year. Completely fine. But until we get above these resistance levels, I don't know if that's even worth a trade. And I'll do it one more time while you guys can see it right there. If I see something substantially move higher through there, then yes, this comes back into play. This comes back into play. That Santa Claus rally, although short, can be pretty powerful. But for now, zero's great. Zero worked back here. This is Wednesday of last week. I know I'm drawing on a small chart, and this is Wednesday today. We're still within that range. So sideways has still worked. You just had to sit through a lot of volatility. All right, folks, let's move to the sector analysis real quick, and then we will go out and take a look at some trades. So please type those in. I'm not sure how many we're going to have. We don't usually have a whole lot on Fed days. So here's our weekly performance. Now this is from Wednesday to Wednesday. Technology 5.33, energy 0.81, defensive, basic materials. Some of those safe havens are on the lower end, but they're still positive. Technology, real estate, things that are super volatile. Big surge off the bottom. I just can't ignore that that might be this. Hey, here's my chance to buy ABC technology off of the bottom, something that I believe is going to do great in the next year and a half. I think it's just a little bit of a rotation. It hit all at once. People got excited about a CPI number, but then I think the market slowly realized we're not out of the woods just yet. But they're doing pretty decent. So let's take a look at these charts. The first one is tech. And this sector still looks like it's back within its, or trying to get back within its range, but a pretty good push to the upside. Volume, all right, not the best. Is this an oversold bounce, or did it just short squeeze people? I don't know. But it gapped up, and it's come back down. And right now, it's kind of sitting at that 35 level. This could float higher with good news. Let's go to energy. Now, this one is on the weaker side. This is the second week in the row, folks. It's been on the weaker side, right? We saw this start to roll over, thinking that it might consolidate and bounce above that 15. It didn't. It's actually using it as a resistance. So we'll see. We'll see where it goes from this area. But sideways to down on energy, I'm okay with. I'm okay with it. Now, this would be more of a long-term trade. These are more long-term. All right, quick conclusion. We could see another bullish surge if the Fed moves to a more dovish outlook. It's obvious. If the Fed comes out and cuts less than what he's expected to, we're going to search. I don't know how we don't. After the conversation, whatever he says, saying, hey, right now we like what we're seeing, but we're not going to relax just yet. That might create a little bit of turmoil in the markets. Or maybe if they say we've been focused so much on the consumer price index that there's other factors they have to look at. Maybe he says something like that. So try to keep your powder dry, folks. Skip down to that last bullet point on the markets. Don't let one day create destructive impulses. I myself was pulled to just hit the bull button when it came to Tuesday. I really just went, whoa, that's it. I mean, that's going to be a big number. That was a drop. That's what the markets are looking for. I saw the futures shoot up 700 points. The markets opened up 600. Well, at least the Dow did. And so it really did cause that impulse to jump in. Don't let that happen. Stay focused on the overall range of the markets, or just completely ignore them and enjoy the holidays and watch this as fun. That's what I'm doing. Sentiment is neutral. I'm going to keep it there. It's reactionary. We talked about that over the last few weeks, and it's still mixed. The economic data, folks, is still mixed. Services is high. There are jobs being created. People are filling roles. There is demand out there from the consumer. But consumer price is showing that it might be peaking, which is great. I don't know. We'll see. Okay. Let's go out and take a look at some of the trades you guys are looking at. There's not too many. I didn't think there would be. That's fine. And then we'll just sit back and see what the Fed does and see how the markets react to it. So a pretty good move this morning, and we're just kind of consolidating up about 0.5%, which is exactly what we'd expect a Fed day to do. Get up to a point, sit back, and see what happens to what the Fed says, and then we'll see the reaction to that. Okay, so Dan did a PG trade. We were just looking at that, and he did a 150-155 call spread for the 20th of January. Let's take a look at it. I'll draw the line so you guys can see it. We did just, P&G. Oh, sorry, folks, P&G was on our list, but I didn't have the chart, I don't think. Let's see, 150, 155. Yeah, it looks really good. Nice slow churn up higher. Just leaked above its resistance. Consumer defensive. I love it. Procter & Gamble. What did I say? Right? Tobacco, alcohol, entertainment, and your staples. Toothpaste, deodorant, shampoo. You need all of that stuff, right? So pretty fun stuff. Okay, cool. I like it. I think it's kind of neat. And it's the 20th, so it's a little bit of a slow play, and that's okay. I mean, it might play this game too if it gets bearish over the next couple of hours. But stick with it. I'll write it down. Let's write it down. We needed something, maybe a couple of trades to take a look at for next week. All right. Felix, would you close a trade which is currently hanging at break even due to the FOMC meeting today? And I get that a lot. And that's kind of the last slide I wanted to say. Don't let any worries or anticipation or freakouts kind of knock you out of anything. If you have in your plan that you got into the position and you wanted it to continue what it's doing without any sort of outside influence, then yeah, you should. This is something that, well, and this is also something that we should have seen a week ago. You know, the FOMC meeting was today. We knew that a month ago. We knew that 2 months ago. So if you made a trade knowing that you're going to be carrying it over that, then don't let just this freak you out. And at break even, you're almost at a coin flip. It could be good, it could be bad, it could help your position or hurt it. It just doesn't matter. So it's kind of luck of the draw. And based on what I saw yesterday, and based on what we've seen when these markets bounce off the bottoms, we have a market that seems to pretty much correct. So if you've got something sideways, your best probably just to hold it. So just follow your plan, Felix, and then on top of which, if you position size for max gain, max loss more importantly, then this is something you could probably weather. But I get that question a lot, so thanks for asking it again so I could address it to this class. All right. James is saying, hey, it's going to be interesting to look at, he's looking at some financial stuff. Let's take a look at some. XLF in general. I think he made mention of Bank of America, BX. Let's take a look at it. So, yeah. Seeing if it's topping. I mean, the candlestick pattern, guys, let's go ahead and give you a small brief teach. It's called a dark cloud cover. Now, this isn't the best example. This is actually a better example of it right here, where you've got a big surge to the upside, a gap up, and then it comes back down. The cloud comes back down within the previous body. This is a reversal signal. Usually, you're supposed to have a lot of volume here. It's a reversal signal to the downside. It's capitulation is what we like to see. Moves like this. Now, this is more of a engulfing, but it's the same idea. Huge surge, big gap, big move. This is it, and then it just completely fails. And so, yes, we have the first signs of that here. Doesn't mean it's going to happen, right? I can run the stats on it. We can go to the Bulkowski website and find out exactly the statistics of running 100 of these, how often they confirm to the upside or downside or things like that. That's why I like doing the series I'm doing. But right now it's a little early. But yes, it does look like it could be a little bit ominous. Yeah, especially if it breaks this 35 floor. Let's take a look at a couple more. BAC. Just the ones that James was talking about. I won't go in too much detail, but let's just zoom in on them. Sure. Yeah, look at that. We'll flip around, gapped up. Could roll over. BX. And these are inflationary companies, right? They're going to be very reactionary and very affected by bake rates and inflation. These are all great candidates. In fact, can I just write them down as bears? Let's go ahead and write down BX and BAC as some bears. Let's write them down. We'll keep an eye on them over the next week. Thanks, James. Okay. Let's take a look at Merck. Felix has got one here. It says strong sector, strong stock. Absolutely. Merck doing pretty good. Let's write him down. And there are a lot of these that will outperform. It's a staple. I hate saying that because they can go away so fast, but it is. A drug manufacturer. It's been around for a long time. I don't know if is it a Dow 30? If it's not, it's got to be in the S&P. I mean, it's pretty good conglomerate, good size, solid, defensive. Thanks, Felix. Dan, thoughts on silver and gold? You know that's not my wheelhouse. I'm going to type the tickers in, but I think you're just generally talking about silver itself and gold itself. And then he said reaction to the Fed. I have no idea. I don't know. I just know that the dollar's been super, super strong. Gold has really done absolutely nothing. It's just kind of flatlined. Now, based on what's going on in the cryptocurrency markets, I would expect gold and silver to react more. And maybe what we're seeing in silver, that's a pretty good reaction, actually, now that I look at the chart. I mean, this is just SLV, but that's a pretty good run. Let's see what gold's done on the longer term. But it's with commodities, they're all based against something else, at least with precious metals. So if the paper dollar is weak, these seem to do better. Yeah, silver's taken off a lot more than gold has. But in light of what's going on with the crypto world, and I can see that that's probably where you're getting your strength. But if we continue to increase interest rates, the dollar should really surpass that. It really should. All right, Sebastian, what do you got here? Got a high base diagonal call February 103. Let's see. Oh, on the bond. Is this a bond, right? Let me go ahead and zoom in first before I start to draw the treasuries. We'll continue to sell calls each week. I like it. Okay. So we're going to play a little bit of outperformance, thinking that, yes, that the Fed's going to stay diligent on track. Even if they lighten up, they're going to stay on pace with it. So we'll see. Let's see if the interest rates continue. So you got 104, 110. Okay. Okay. Let me see if I can draw some lines here. Okay, yeah. And then he's saying, hey, he'll sell each week if we continue to get something like that. I can get behind that. Sure. Sure. And I think the reaction here, this little muddle that's been going on, if the Fed shows that they're going to take their foot off the accelerator, this initial move might be down. But I think it consolidates because they are going to continue to raise. It just won't be as aggressive. So I imagine this would just kind of follow suit. A little bit of theory there. Thanks, Sebastian. Something fun to talk about. All right, guys. So not much. I didn't think we were going to have too much going on. But, there's going to be a whole heck of a lot going on here in the next hour. So, all right, one last one. Felix jumped out. AR. He says it looks pretty good. Or pretty weak. Let's take a look at that. How weak is it? Yeah, nice bear rally. Energy. Sector that's been a little bit weak as of late. I like the chart pattern. Let's write it down. Oh, let me put down TLT. I'm going to put down TLT as sideways with an up arrow. Just because you're slow playing it, Sebastian. I kind of like it. But this looks nice. I like this. Let's draw a little bit of a line. It did move off of a little bit of a, I guess that's an E. No, that's lower. That's lower. Good. Good. I like it. Yeah. Crossed over here. Thanks, Felix. Kind of fun. Keep an eye on that. I put it on the bear watch. Okay. So let's finish this up. We got a couple of bulls, both in the or what's supposed to be defensive with PG and Merck. And then I did put one on the sideways there. I took Sebastian's. It's more of a diagonal, but I'll put it on the sideways with an up arrow. BX, BAL, and AR. Cool, guys. Something to look at. So here they are. Let me go ahead and draw an arrow to the upside for TLT. And there it is. All right. Please don't push any buttons until after the Fed says something. And more importantly, let's see what happens after Powell gets up and kind of explains himself. We have seen these take a day, right? So we have a little bit of a push-pull. Things go nowhere. And then Thursday is where we get our move. So that might happen again. Let's see if this last Fed meeting here can do anything. Create a Santa Claus rally where everything's green and we see a nice slow move to the upside. I could get behind a slow move to the upside more than I can an aggressive, huge surge to the upside because we saw what happened with that yesterday. The other coin would be he doesn't take the accelerator off. Things are a little bit more worrisome. He's going to be cautious going into 2023. Do we sell off huge? I still doubt that. I don't see a real benefit to just dumping and being down 3 or 4% into the end of the year. That might happen the first part of the year. All right, that's it. Okay, guys. Thanks so much for joining me. Appreciate you. And we'll talk to everybody next time. Bye, guys.